Welcome to another weekly market video. Today is Monday, 5th of October, and we are beginning the new week, also the new quarter. We have been able to close very wild month of September. So let's look at what were markets doing last week and also what they might do in the coming days. If we are going to look at S&P 500 and maybe other stock indices, US stock indices, we're going to see that we were able to snap back the 3-week losing streak. We had also, like I said, the beginning of this month, also the end of August was quite volatile, and what we were able to see and experience here was the snapback. Also, S&P 500 was able to rise a little bit. If we're going to look at the 1 daily time frame, we can see that we were able to bounce back from 100 daily moving average, which is a very strong support watched by many analysts and traders on Wall Street. So this is a very important support which markets were able to keep and bounce back from it and rise a little bit. The main catalyst for the moves and basically the gains that we were able to see last week on S&P 500 and other stock indices, basically the overall sentiment and belief of investors around the world that the fiscal stimulus might be on the way, although the Republicans and Democrats are widely divided by the amount of fiscal stimulus and how big it should be. Republicans, they offer $2.2 billion fiscal stimulus. Republicans, they would like the fiscal stimulus to be much lower, about $1.5 billion. So there's a small disagreement. But if we're going to look at the latest news on the markets, Donald Trump has been tested positive on Friday for coronavirus, COVID-19. So this changes things a little bit, and also it might change the whole atmosphere with the negotiations about the fiscal stimulus bill. So it might get passed in October before the presidential elections, although Biden is probably right now gaining in polls, and he's probably getting more and more preferences. So this might also change the dynamic of the negotiations. So basically, the hope for the fiscal stimulus in the United States was able to push stocks a little higher. If we would look at certain sectors, mainly financials and utilities, were the biggest gainers. Technology was held back a little bit, mainly by Friday and the huge drop in valuation in stocks, thanks to the positive test for coronavirus on President Donald Trump. So this is what was happening on the market, stock markets in the United States. If we are going to look at DAX and basically all other stock indices in Europe, this is mainly pushed back by the coronavirus and the spread of new diseases in different countries in Europe. So as we are talking Germany, Czech Republic, we can talk about basically Spain, Italy. The outbreak is not that bad, but definitely numbers are rising. So this is a subject to concern, and we are going to see probably more and more restrictions that might limit the economy recovery and the path that the economy is on right now. So maybe the more fiscal stimulus, monetary stimulus will be needed. We can see DAX was under pressure last week and might stay under pressure also in the coming days. So this is basically what happened on the DAX. We are not really expecting any big moves up, mainly because of the spread of the coronavirus in Europe and also the lack of fiscal stimulus in Europe, because right now we have another fiscal stimulus on the way in the United States. Also, investors are being supported by a huge monetary stimulus from Fed and the quantitative easing, low rates, basically negative real rates. So this is a huge support for stock markets overall, and obviously investors believe that this will stay on the market and this will keep supporting the market. So this is mainly this is the two differences between US stock indices and European ones. If you look at the Forex, Euro, obviously we were able to see some risk on sentiment back. So Euro and basically US dollar was pushed back a little bit, which helped Euro gain above 117. The same thing probably we're going to see in the next week. I will not expect probably any big moves down, as if we will look maybe the worst case scenario for President Donald Trump, which would be his death. Historically, if President in the United States was hospitalized or died during his presidency, the biggest markets, or the average drop was about 3%. So not a big sell-off is expected. So and also if we will look at the news, the latest news about his health and his condition, the White House representatives say that it rapidly got better, and it should support the market, and it should support the overall economy. Obviously, we will have to wait and see how this might affect the presidential debate, which is scheduled for 16th of October, and if we will talk about Forex and EURUSD, I think we might be able to push above 118 very soon, if we are going to keep the risk on sentiment as it is right now on the markets. If you look at GBPUSD, we can see very volatile week, starting in Monday and basically ending on Thursday, where the European Union also got involved in a legal battle with the UK. But overall, Brexit news were quite positive. Basically, Boris Johnson and French Prime Minister said that the Brexit deal has to be done by the middle of October, and then it probably will be very hard to pass the deal. So this is something that probably will stay with the GBP for the next coming days. You can expect more and more volatility as the half of October is coming very soon, and you will be able to experience big moves on GBPUSD. So I would be very careful with placing some limit orders, also with the stop losses. And you can see that this what happened on Thursday, this can happen every day here. So obviously you cannot expect it every other day. As you can see, Thursday was very volatile, and basically Friday was a very choppy session. So you can expect a big volatility. I wouldn't really expect big moves. I would expect moves up and down. There is really no huge expectations for GBP to rise any further above 130, but anything can happen here. You can experience, you can see some very positive news about Brexit, and this can push GBP above 130. But at the same time, we can see some very negative news about Brexit, and it can push GBP well above 128. So this is all a mystery. Let's wait here and hope that everything will be fine, and also will support economy of United Kingdom as well as European Union, and we will not be seeing any bad outcome from this. So this is GBPUSD, and let's look at the USD Japan, which Japanese yen was able to gain some profits on Friday, which was mainly supported by the risk of sentiment on the market, which was caused by sickness of President Donald Trump. But as you can see, US dollar was able to get those losses back very soon, and now we are back in this consolidation, which is here from the end of last week, basically the end of September. So the choppy sessions probably will continue, and if you look at the oil market, this was very interesting week for oil. Again, under heavy pressure from worsening outlook for demand and also for supply, because Libyan production is coming back. Also, OPEC is right now pumping more oil than in summer to the market. The exports from Saudi Arabia and Russia are rising, and this could probably disrupt the supply and disrupt the overall balance on the market. So this was the main reason for the oil to drop below $37 a barrel, but was able to bounce back from 3-week low. And as you can see right now, the beginning of the week is looking quite positive. Again, I will not expect any big moves above $40 or even below $40. There is still huge supply cuts on the market, which could support the downfall. Stop the downfall and support the prices a little bit. Also, the demand, mainly because of rising cases of coronavirus and more restrictions that might be coming on the way. This is a huge pressure from the demand side. So I will not expect any big movements, and those big movements might be supported maybe from inventories of U.S. oil, or some news like from Norway today. There was some fight between the largest Norwegian oil company, which was forced to shut down their oil fields because of some fight because of wages. So this thing can disrupt supply, but in this case in a positive way. So you can see right now the beginning of the week is looking quite positive for oil. So this was the markets this week. Last week, if we are going to look at the most important macroeconomic news last week, we probably cannot not mention the NFPs and data from job market from United States. If we're going to look at the Friday, yeah, we can see the economy was able to create 661,000 jobs, a little below the previous number, but the overall creation of the jobs is probably going to get slower and slower as the unemployment rate drops below 8%. So this is dropping very slowly, but it's dropping towards the 4% where we were at the beginning of the year. So this was overall quite positive report for U.S. job market. And if we are going to look at the news for this week and what we can expect and what could cause some big volatility at the market, the Monday should be quite okay without big news. We have ISM non-manufacturing, so service sector from US is going to get its PMI numbers. Also on Tuesday, watch out for RBA interest rate decision from Australian Central Bank. We have some speech from Christine Lagarde from ECB. We also have JOLTS, job opening, speech from Jeremy Powell. These are things that can cause a bigger volatility on the market. On Wednesday, there shouldn't be much. Expect another speech from President of ECB, IB PMI from Canada, and like I mentioned, something that might cause bigger movements on crude oil is inventories in the United States. So if you're trading oil, watch out for that on Wednesday. And on Thursday, we have some speeches from presidents and chairmen from central banks, from Switzerland, from UK, also from Bank of Canada. We have initial jobless claims. This can also, if there is a bigger difference between the number and the consensus, this may cause a bigger movement on the market. And the week we are going to end quite. We should end it with a not big volatility, as we do not expect any big macroeconomic news. So this is overall should be very okay week with no big moves expected, no meeting from central banks and so on. So this would be it for today's video. If you have any questions or comment, leave it under the video on YouTube, and I'm looking forward to seeing you next week.